What's up guys, welcome back to the channel. Today we're talking about the Asian range. The Asian session is not one of the most popular sessions people trade. Most people focus on trading the London session and the New York session, but today I want to talk about the Asian range. The Asian range always do well when it comes to accumulating, but that doesn't mean that all pairs range during the Asian session. The Asian pairs, they don't range during the Asian session. We do see some significant movement during that particular period, and this particular strategy I'm going to teach you in today's video is owned by ICT. What you should keep in mind is that what you want to see is a range, something like this. What I'm showing you right here, this is what you want to see if you want to trade this particular strategy I'm going to talk about. If you open your price chart and you spot the Asian range and it doesn't have an accumulation like this, you have to avoid that pair for the day and don't trade it. So the pairs you're going to focus on are the GBP pairs, focus on the Euro pairs, and the USD pairs are the pairs which you will look to take advantage of if you want to trade with this particular strategy. Okay, so if you look at the AUD pairs, the NZD pairs, and the JPY pairs, that is Japanese yen, if you try to trade those pairs, that's waiting for those pairs to accumulate during the Asian session, I don't think you might actually get that. So it's important you focus on the GBP Euro pairs and the USD pairs. Okay, so that's what you want to do, and the time frame we're going to look at is the 15 minutes time frame. So the very first thing you will need to note right now is that the Asian session begins by 7 p.m. New York time. Okay, 7 p.m. New York time, and you can see this line right here. This is my 7 p.m. New York time. I already have it drawn out. Okay, and it ends at midnight, that is 12 a.m. New York time. This second line you see right here, this is 12 a.m. New York time. Maybe I should make the line a little bit thicker, so I have to make the line thicker so you see it a little bit clearer. Okay, now you know when the time begins. It begins at 7 p.m. New York time and ends at 12 a.m. New York time. So keep that in mind, and I know you should know how to set the specified time, like I've been explaining in the other videos where I talked about London Killzone and the New York Killzone. I explained how to set your time zones. Okay, so you should know how to do it by now. Now the highest of the range is the highest high between 7 p.m. to midnight to the lowest low between 7 p.m. to midnight. So what I'm simply saying is that the high of the range is the highest high during the specified time. So if you come at this area right now, you see the highest high right here. So this is the high of the range, and the lowest low is the low of the range. So if you come right here, this is the lowest low of the range. So this is the high and the low of the range. Okay, so this is the way you're going to do it. Map out the highest high of the range and the lowest low of the range. So the width of the range is the duration of 7 p.m. to midnight New York time. What I'm simply saying is that the time starts from this area right here, 7 p.m. New York time to midnight. So this is Asian range. Okay, very simple. This is Asian range. This is what I'm trying to make you understand. Now, what happens during the New York Open? So what sets up the opportunity for the trading day is if we have a very narrow consolidation. If we have a range like this, just like I explained, if we see a range like this one we have over here, and this range is between 7 p.m. to midnight, this is a very big opportunity. Okay, this is going to be a very big opportunity for this particular trading day because the market opened. Here is the Asian session and we're getting this particular range right here. So when New York opens, we're going to have a very good trading opportunity for that particular day. There is a possibility that the market is going to trend after seeing this range right there. I hope you understand what I'm saying, because you know the market has different phases. We sometimes see the accumulation phase, and in some other time we see price moving massively. Okay, have it in mind that the next session, which is the London session or the New York session, we're going to see a trending market. Okay, so another thing you should keep in mind is that the market is going to seek liquidity above or below this range. Okay, so when you have your time zone and you have your Asian high and Asian low mapped out, what you should note is that the market is going to seek liquidity, and once price seek liquidity is going to put people in the wrong direction of the market. You all know that when we have this Asian high and low, it's known that stop losses are placed above the highs and lows, because at this point the market is moving calm, and a lot of stop loss will be placed above the range and below the range. So what you're going to see at this particular time is that price is going to sweep liquidity. You're going to have a manipulation phase where price is going to take people out of the trade, sending them in a wrong direction. Maybe breakout traders who will be waiting for price to break out, who have their buy stop at this particular high. Price is going to trigger the buy stop and send them to the opposite direction, or people who have their sell stop in place at this particular area. What you're going to see is that price is going to sweep the liquidity. That is, price is going to take their buy stop and send them at the wrong area. So that is basically what ICT said in that video. So from this particular area, you can see price has been in a downtrend. This is just a little downtrend because if you look from here, price takes this particular low. We have this range right now. So price is in a little downtrend for this particular time frame I'm looking at. Now, the period when price is bearish, we can extend the Asian range high and the low into the future. And this is what I just did. You see, this is the high of the range and this is the low of the range, and it's been extended into the future. And what do we want to see? We want to see a sweep of liquidity. Okay, so if price takes the high first, if we see price sweep the liquidity above this high, we're going to look to trade to the opposite direction. Now let's press price forward and see what this looks like. Now you see price range a little more. You can see what price is doing. This is actually the London session. Price was ranging a little more, and let's see, boom. You see what's happened during the London Killzone. What we see is that price sweeps the high, and after price sweeps the high, what do you see? A massive push to the downside. I hope you can clearly see what just happened there. Price sweeps the liquidity above the high, and you see the massive push to the downside. So if you want to take this trade, where could be your possible entry? When price sweeps the high, what you're going to do is you're going to drop to your lower time frame to look for your confirmation entry. And I've actually talked about confirmation entry. What you're going to look when you drop to the lower time frame is you want to see a market structure shift. So if you are able to get a market structure shift, you can look to enter your trade at that particular area and look to trade to the downside. And the second way ICT said he used to enter this trade, this was 5 years ago. What he said is that he can actually place a sell stop at this particular area. Since he's seen that price sweeps the high and he failed to get an entry at this particular area, or he missed entering at that particular area, what he's going to do is he's going to place his sell stop below this low. So once price hits the low, it's going to be triggered into a trade. Okay, and he said in some other cases he might actually enter half of his position at this area, and when price hits the low, it's going to trigger the remaining position, so he will look to trade to the downside. And another way you can actually take this trade is you can wait for optimal trade entry. Okay, this can actually give an optimal trade entry, but you might not see this all days. It might not always give you that particular entry, but the best entry type for this strategy is looking for a market structure shift on the lower time frame. So playing price forward, let's see. Now we see price continues to push to the downside, and this is a very simple strategy. This is one of the best strategies ICT has taught. And when I started trading ICT concepts, this particular strategy is one of the best strategy I trade, and even till tomorrow I still use this particular strategy and I keep teaching my students this strategy. So what ICT said is that you can actually wait for an optimal trade entry. So what you do is you use your fib to measure from the high to this low right here. Now wait for price to hit the premium level and you look to enter there and continue trading to the downside. And this is how you can actually trade this Asian range, and this is a very good strategy. This strategy might not present itself every time in the market, but when you see this strategy, try to take advantage of it, because when you combine it with time, you're going to have the best entry. And from what you can see, this is the kind of setup we usually see during the London Killzone, and during the New York Killzone, we're going to get an optimal trade entry that might continue to the downside. Okay, so let me show you the second example, and this is the second example. This is Euro JPY, though 15 minutes time frame, and this is really happening now. Today is the 11th day of August. Okay, today is Friday, the 11th day of August 2023. This is the current price action right now. So from what you can see, this is the specified time, that is 7 p.m. New York time to midnight, that is 12 a.m. New York time. And like I said, what you want to do is you want to mark out the high and the low of the Asian range. This area right here is the high, and this is the current low we have right now, right? So what you're going to do is during the London session, we're going to wait for that liquidity sweep on any side of this particular range, and for what you can see, price is currently pushing to the downside. But let's see what we have at this particular area. You can see this is still the time zone, the specified time. Price forms this particular low before we see this pullback to the upside. So we don't have the liquidity sweep yet. So playing price forward, what you can see, price moves above this area, sweeping the high right now. So this is a very simple strategy. Just identify the high and the low, and for what you can see, the market wasn't trending over here. We've seen a calm movement over here. Okay, price was in this range. Just remember what I said during the Asian session. If you see price giving this kind of reaction, you can see how massively price pushed to the upside. If you see that kind of reaction, you want to avoid trading that. Now that price has swept liquidity, what I said is the first entry is you have to drop down to your lower time frame to look for a market structure shift, then look to trade to the downside. Or in another case, according to ICT, you can place your sell stop at this low right here. So when price pushed, it's going to trigger you and you look to continue to the downside. Now let's see what happens. You see, now price pushed to the downside right now. So if you got your entry right here, you're already in a profit, and now we're getting a little pullback. Price continues pushing back to the downside. Now over here, you see this time this is 6:30 a.m. New York time, and price is very close to New York open. Now if I play price a little more, what you can see is this area right here. If I try to mark this area out, this is 7 a.m. New York time. And remember, if you're looking for your optimal trend entry, measuring from this low to this particular high with your FIB 2, I'm very sure you got a very nice entry at this particular area. Okay, so if you're looking to trade the New York Killzone, this is a very good place you could look to enter your trade, and this is a very simple strategy. Now you see price taps into this order block, and you see the continuation to the downside, and this is where price is currently at. Okay, so this is how you can trade this simple strategy, and I guess I've shown you guys 2 examples, and these examples are actually a bearish example. Okay, these examples are bearish example. I think I have to show you one bullish example before I end this video. So this is the last example I'll be showing you guys. So from what you can actually see, this is USDJPY, and this is the specified time, that is 7 p.m. New York time, and here is midnight. Okay, that's 12 a.m. New York time. Now, like I've said, you should mark out the high of the range and the low of the range. Which range? Talking about the Asian range. So this is the high, that's the highest high of the range right here, and this is the lowest low of the range, right? Now what you want to see is a manipulation, because after price has accumulated, you see no clear movement during the Asian session, no clear movement right here. So what you want to do is you want to see price sweep either the high or the low of the range. Once price sweeps the high or the low of the range, what you're going to do is you're going to drop to your lower time frame. The ideal lower time frame you can actually use is you can use the 5 minutes time frame, the 3 minutes time frame, or the 1 minute time frame. So playing price forward now, what can you actually see? Price taps at the low. This is London session right now. You see London session has opened. This is 1:30, and if I continue to play price forward, now we have a liquidity sweep. And what I said is once price sweeps the liquidity, you're going to drop down to your lower time frame and look for entry, and after that, what do you see? Price continues pushing to the upside, and this is a very simple strategy. You see we have a little retracement after price takes the liquidity at this high, and now we see a continuation to the upside. And this is a very simple strategy. If you want to learn from the original source, you can visit ICT's channel. What I'm basically doing is breaking it down in a simple way so you understand it better. Okay, so that's it, and I hope you got value from what I explained today. Once you understand how to use the specified time, once price sweeps liquidity from any side of the range, drop to your lower time frame, and you're going to get a very good entry. It doesn't happen always. The truth is that you won't see this price action always, but anytime you see it, try to take advantage of that. Okay, so if you were actually looking for an optimal trade entry pattern, this area could be a very good area you could look to enter from and ride the continuation to the upside. Okay, you're going to trade the continuation to the upside. So that's it, and I hope you got value. If you're new to the channel, consider subscribing to the channel. I'm Solomon Wisdom, and here is Born to Trade. Consider subscribing to the channel and be part of this family. Okay, so thanks very much, and see you in the next video.